I'm going to tell you about the 3 major types of mortgage loans in 2018, and it's coming up right now. Hello and welcome. If this is your first time on my channel, my name is Matthew Tortorelli, and I'm a mortgage loan officer in California, Arizona, and Texas. And if you like great content like this, consider subscribing. Now, let's get into the content. You saw the title, Mortgage Loans Explained 2018. Let's go through it, okay? So, let's start with conventional, okay? Conventional loans are great if you have great to excellent credit. They are just phenomenal loans, okay? They come in all shapes and sizes and are the most flexible in what can be accomplished, okay? So if you're looking to buy a type of investment property or second home, you're looking for a conventional loan, okay? You may not want to get a conventional loan though if your qualifying credit score is under 700, okay? This is because assuming you're not putting 20% down, the interest rate over FHA is substantial if you don't have ideal credit. On top of that interest rate not being ideal, the mortgage insurance, if you're not putting 20% down, the mortgage insurance can be massive, okay? And just to give you an example, MI for FHA loans, with few exceptions, is 0.85% of the loan amount per year divided by 12 months. That's how much your MI is per month, okay? With conventional under 700 FICO, I've seen that go as high as 1.17% per year divided by 12 months. That's how much your MI could be with conventional. It could even be more, that's just from my personal experience, okay? Now, let's go to FHA. So an FHA loan might be the right choice for you if you have less than perfect credit, okay? FHA will allow you to qualify all the way down to 580 FICO, and that's just fantastic. You can even qualify lower than that, but that's a separate topic. That gets a little complicated. But for the most part, 580 and above, you're good to go with FHA. It's a fantastic loan in that way, okay? And if you're tighter on your debt-to-income ratio, if you have some higher monthly expenses, card for my debt-to-income ratio episode right there, boom. So if you have a lot of debt on you every single month, you can actually go with a higher debt-to-income ratio with FHA. Okay, we've rambled on enough about FHA. Let's go to VA. VA is probably the best way you can borrow money on God's green earth. It's fantastic. You're going to get the most competitive interest rate normally out of the 3 options that we just talked about. You're going to get no mortgage insurance, and you can borrow up to 100% of the value of the property. That means nothing down. So if you can get a VA loan, get a VA loan. If not, you've heard the other 2 options. Depending on what court you play ball in, you know, there you go. And by the way, if you ever want to reach out and talk to me and ask me some questions, I'll throw my number up right here. But again, my name is Matthew Tortorelli, number 602-345-1781. Feel free to hit me up anytime. And now let's roll the outro. Peace.
Thank you so much, everyone, for watching. Please make sure you smash that like button and leave a comment below. I will be there to continue the conversation. And if you like this content, please make sure to subscribe and follow me on social media. That's Instagram @TheMortgageDon and Facebook as Matthew Tortorelli, Loan Officer. Thank you again, and have a great one, everyone.